Hello, good afternoon, and welcome to this Themis webinar in partnership with Fiserv. Tip of the iceberg, financial crime in 2020. And as you can probably see from my background, we've come to the sort of end of quite a dramatic year. And it's been particularly concerning when we've been dealing with financial crime, as highlighted by the respondents in the recent Fiserv Financial Crime Survey. Criminals clearly remain several steps ahead, and COVID-19 has only given them an extra edge. The ability of financial criminals to stay ahead of the game by adjusting their methods to changing circumstances stands out as a key theme in the Fiserv survey. So trying to pin down this emerging financial crime threat is as challenging and as trying to estimate the cost of financial crime. In this webinar, we're going to be exploring the new instances of fraud which are driving these changes and activity in money laundering and other financial crime related circles. So how and why does financial crime increase during recessions? What has been unique about criminals' approaches in 2020? And are we just at the tip of the iceberg? Today, I'm very happy to be joined by our panelists, Andy Fyfe, who is a Detective Chief Inspector at the Economic Crime Department of the City of London Police. DCI Andrew Fyfe is a highly experienced fraud detective within the Economic Crime Directorate. During his career, he has investigated a wide range of serious, complex and organised fraud cases. Since April 2020, he's been working in the action fraud arena as a specialist police advisor on fraud and cybercrime. Andrew Davis is Vice President of Global Market Strategy, Financial Crime Risk Management at Fiserv. Andrew works with Fiserv customers around the world to design and deploy effective risk management solutions to mitigate financial crime risks. He is a certified anti-money laundering specialist, and you'll be able to see him on numerous industry events, and he has contributed to articles in the American Banker, Credit Union Journal, FinExtra, and Payments.com, among other publications and websites. Nolan Williams is a former MLRO at Arion Bank and CEO of Leeson Williams Consulting. He is the head of financial crime compliance at Arion Bank in Iceland and was responsible for the monitoring and effectiveness of the bank's financial crime policies, procedures and controls. Nolan also worked at Goldman Sachs in London for 17 years. And thanks very much for joining us all over the panel. Nice to have you here. Also, just to let you know, obviously you can't see Andy Fyfe. Given his role as a police officer and an active one in the City of London Police, it's been sort of considered that it's probably best if Andy doesn't show his face, but he is listening in and he will be speaking with us during this webinar. So I think probably to kick off the discussion, I think if we're talking about financial crime in 2020, it's been a particularly worrying year for financial crime. And obviously this has been hugely down to the global pandemic and the recession it's causing and the techniques criminals are using to exploit this drama. So Andrew, maybe if I could start with you. Sorry, Andrew Davis, we do have two Andrews on the line today. What do you think has been the most concerning developments during 2020?
So firstly, thanks, Henry, for organising this event for us and to showcase the outcome of our survey. It was actually the genesis of a colleague of mine called Alan Jarvie, who really manifests one of the sort of corporate principles of Fiserv, which is the notion of doing the right thing, the moral imperative. And thanks to Nolan and Andy for participating as well. It's really fantastic. From my perspective, the numbers speak for themselves. I'm actually based originally from the UK, but based in the United States. And one of the things that we saw in the United States, the Federal Trade Commission reported 4 times as many fraud complaints in the first 3 weeks of April than they'd seen in the previous 3 months combined. The total losses in the United States for COVID-related scams is estimated to be around 150 million US dollars lost to COVID scams. Now, if I fast forward or sort of leap across the world in a virtual way, in the world that we're living in today, I go to Australia, and the Consumer Protection Agency in Australia reports that more than 5,000 fraud complaints linked to COVID-related scams. I think one of the things that we've seen in this during the pandemic is not so much is the versatility and the agile nature of the criminals. And also the pandemic has really been a catalyst for certain types of fraud, especially taking advantage of more and more real-time payment rails globally. So I think the number one concern is obviously scams, but then what the underlying problem is there is the exploitation of vulnerable population. Coming back to that notion, the genesis of this survey, which was that notion of the moral imperative, doing the right thing. The pandemic and always fraud is counter-cyclical with the economy. And in this particular case, I think the most nefarious activities, the fraud and the exploitation, some of those other predicate crimes for money laundering of vulnerable portions of the population, whether that be individuals being trafficked, or whether that people being vulnerable to having their credentials stolen, to be used in synthetic identity fraud. All of these things are about exploiting other people and exploiting the financial system, and the criminals have been very versatile in that.
Great, thanks, Andrew. And Nolan, would you have anything to add to that in terms of what you've been seeing this year, given it's sort of unprecedented?
Well, first of all, thanks for having me, Henry. And it's an absolute pleasure to be a part of this panel discussion. Without a doubt, 2020 has been a worrying year in financial crime as a whole. And I think to fully comprehend, why this has been the case, it's important that we remind ourselves of a very important fact, which is serial fraudsters are always on their game. They are, continuously surveying the landscape for opportunities, irrelevant of whether we are in or out of a pandemic. And that's one of the reasons they seem to be, as we say, always one step ahead of us. But this pandemic, what it has done really is it has just made it easier for them to ply their trade. Serial fraudsters, as we know, they don't need a second invitation to act. They think differently than most of us. And at some point during their career, they managed to overcome the idea of guilt. And, having been able to rationalize their action. So, put simply, it's their profession. And they are always looking at new ways, new methods in which to circumvent controls. And I think it is fair to say that this pandemic was a perfect storm for fraudsters. For, in situations such as this, most of us generally are looking the other way, at the issue at hand. And institutions such as governments, you have law enforcement, regulators, those, who may have some responsibility in overseeing fraud and financial crime controls, are mainly caught up with the issue at hand, which has been the case globally. And then, of course, at the other end of the spectrum, you have the consumers whose attention are also channeled elsewhere. I think a great example of this, as we all know, is that during the early stages of the pandemic, because so little was known about the virus, a lot of time and attention was taken up, scavenging for information. People were anxious for information. They wanted to learn so that they can protect themselves. And for me, I think this lack of focus from both ends of the scale presented what I would say the perfect opportunity for fraudsters. And they certainly took advantage of it. With everyone focused being channeled elsewhere, it was a perfect platform for a fraudster to ramp up their efforts in fraud. Personally, we've seen increases in the area of identity theft, phishing, social engineering, charity, and cyber fraud. I mean, just to name a few that has pretty much tipped the scale. I think, rightly put, this is just the tip of the iceberg, as I've not even, gone into or included common trends or schemes in the private sector. So what this tells me is that the old cliche still holds true, in that to enable effective fraud risk management, both private and public sector must be aware of the risks that they're exposed to. With visions blurred due to the coronavirus, it's no surprise to me that the trend this year has been a worrying one, because at the best of times, as we all know, criminals are consistently on their game.
You're on mute. I'm on mute. Thanks, Nolan. And that's really good oversight, I think. And I think one of the reasons we named this tip of the iceberg is because I think we're seeing a lot of crime at the moment, but there's going to be so much more to see during 2021 when I think a lot of these problems start feeding through the system. Before I bring Andy Fyfe on, maybe it's time now to go to our audience, because we have a great number of financial crime experts listening in. And so, audience, I'd like to ask you, we're doing a poll here which you can join in on. What do you think has been the most worrying financial crime threat during 2020? Is it cybercrime, money laundering, fraud, corruption, market abuse, and insider trading? Now we'll give you a bit of time just to discuss all this. It's certainly going to be interesting to see what feeds through into next year. There's a number of things I'm concerned about personally, such as the continued fallout from the recession. What sort of recession are we going to be having? Is the vaccine and migration back to work? Is that going to change stuff? Are we going to see new cyber criminal techniques coming through? So I think these are a lot of issues which we all need to consider, and also probably need to keep a close eye on. So I can see now, okay, so we have the polls up, and I think the winner appears to be cybercrime at 48% and fraud at 42%. This is interesting because in the Fiserv report we commissioned through FEMIS, we actually found it the other way around. It was fraud which was the biggest concern at 42%, and cybercrime much lower at 25%. So I wonder if the interest in cybercrime is one because that takes less time to feed through almost. You can see it more immediately, whereas the fraud can often take a while to come through. And certainly the different types of fraud we've been seeing during lockdown. HMRC here in the UK has reported up to £3.5 billion might have been stolen in furlough cash, for instance. And there's a concern with fraudulent business loans, and also in universal credit, which has been one of the main ways of keeping people afloat during these difficult times. So it's certainly of concern. Andy, as a UK-based police officer and obviously someone working on action fraud, I think it'd be really interesting just to hear from your point of view what's been your key experiences during 2020, and how is this going to develop into 2021?
Yeah, many thanks, Henry, and good afternoon, everyone. So I can certainly echo what's been said already by Andrew and Melden and yourself, Henry. And what I can do is talk to you from the perspective of fraud and cybercrime cases that are actually reported to law enforcement in the UK via action fraud. And we in the City Police, we run that on behalf of law enforcement, and it's the national reporting point for all fraud and cybercrimes. So we've seen significant changes since March, really, in the nature of fraud reporting, but just specifically frauds related to COVID, where COVID is a specific theme that is mentioned within the complaint. The cost or value there is about 30 million quid reported so far by UK citizens. We've had in the UK about 5,000 reports, again specifically where COVID is named, since March, and phishing emails specifically where COVID is a link, at least 25,000 of those. But what we've also seen is a significant change in the nature of reporting where COVID isn't specifically mentioned or named, but it is clearly the cause. For instance, as all of us have been forced into lockdown, and we're still virtually in a lockdown now, the nature of the way we run our lives has changed, and we are online, for instance, a lot more than we used to, and as a result, online related crimes have gone up. For instance, online shopping fraud is up 40% than it was this time last year. Investment fraud up 32%, and that's because people who used to run, for instance, small businesses, find that they need to find alternative ways of generating income, so they're encouraged, or they have reason to try and find other ways of placing their money into investments, and then they're falling prey to investment schemes and investment scams, where fraudsters are preying on the internet. Perhaps more personally, but almost perhaps emotionally more draining, dating scams have gone up 26% since last year, again because people are sitting at home, really lonely. We know of the issues of people with where being stuck indoors is affecting their mental health, and of course people are trying to find contact with others, and as a result they're falling prey to dating scams. You see other things go up as well. Courier fraud, which is where people are cold called by fraudsters pretending to be the banks or pretending to be police, getting involved in some kind of so-called covert scheme to try and catch out corrupt insiders. That's gone up 35% in the last year. So we've clearly seen a change in the nature of reporting because of COVID, even though it's not always specifically mentioned in the reports we see. But I always think of it as fraudsters are really agile, and we law enforcement are always one step behind them as best as we might try and think otherwise. We're always one step behind or so. You can never underestimate how good fraudsters are at what they do. I always think, this COVID episode is another example of where fraudsters never waste a good crisis, because we saw right from the beginning the nature of COVID-related frauds and how fraudsters were moving as the times changed. So to start with, there's things like either fake PPE kits or non-existent PPE kits that people were falling prey to. And then it moved through to things like fraudulent claims against the government grants and loan schemes, of which you just mentioned, and that is clearly absolutely enormous. We don't know the true scale of that yet, but that will be enormous. Then it moved through to things like the charitable donations and charitable collections were again being cloned or fraudulently operating. And then it moved through to in June, July. This is before test and trace was actually in place. We already had the test and trace system being cloned by fraudsters, so they're ahead of us. And what I'm expecting to see soon, now that the vaccines are starting to come through, I'm expecting to see a lot of fraud relating to claims that you'll be able to perhaps jump the queue in getting a vaccine, probably starting just before Christmas, but probably really taking off into the early spring next year. And for me, that's a considerable concern. So COVID has completely changed the fraud landscape, mostly for the worse. But it's just, I'm afraid, the nature of how fraudsters are very agile in making the most of any crisis.
Thanks, Andy. And also, I think that's very important, the way you brought up the human factor here. We're often talking about figures, but each of these crimes do affect individuals, and often in very sort of horrific ways. So I think it's very important to bring that point across. Nolan, from your experience looking from the private sector point of view, where do you see the sort of key free? What are your view on the sort of emerging threat of fraud?
Again, I think I could sort of echo a lot of the schemes that has just been highlighted there. But from a corporate and private sector point of view, there's been significant increases in schemes such as asset misappropriation and payroll fraud. Now, of course, with COVID subjecting many to working from home, attention to existing fraud controls has slipped, which has given rise to these schemes. The most noticeable increase has been in the area of phishing, just as my colleague just highlighted there. The pandemic, as you know, for example, started back in China at the back end of December. And within months, there were reports from cyber firms of malicious websites. One such report claimed there were over 4,000 domains to have information on coronavirus, and the majority of those were already getting hits as having malicious contents. So, and I think the thing I would like to sort of alert you to here is to notice how quick or how such a short time it took for this to have happened. So again, echoing the fact that these guys are always on the game. They're constantly sort of scoping the landscape to see and to be ahead of us. So, and then of course, around January or February, security firms reported thousands of websites claiming to have links to CDC and WHO, many of whom, which at the time were encouraging the vulnerable to click on links for information on coronavirus. Now, what the vulnerable did not know, of course, was that these links and websites downloaded malware onto the computer, and in the process, gathered details of personal emails, addresses, passwords, and of course, and regurgitated them out to the WHO official website. at that point, it's pretty much mission completed and damage done. We've also seen another area which saw a rise in fraudulent activities are those related to products. One just have to look at the many fake PPE products in circulation to get a sense of how quickly fraudsters took advantage of the situation. Recently, the Federal Trade Commission and the FDA back in the US have issued several letters to companies engaged in this act, asking them to cease and desist. And this included products such as Claudio Silver. I'm not sure if you guys are familiar with this or if you heard that, but this was a product, it's a supplement product that was claiming to be able to cure coronavirus. And of course, these claims were fraudulent. And then we also have seen scenarios of whereby legitimate websites such as Amazon and eBay, whereby they were being targeted by fraudulent third parties who were making products with fraudulent claims. Amazon reported that they have removed over 1 million listings of price gouging and fraudulent claims. And then closer to the corporate field, we have seen an increase in business email compromise scams, specifically aimed at the finance department, where they are being targeted by hoax emails. A situation or scenario where a fraudster identifies someone that works in a company, sends them an email, purporting to be from the CEO or someone of a higher figure, instructing them to transfer or wire money to a specific account. Of course, by the time they caught up with it, the damage has already been done. And I'm sure many of you might be thinking, this certainly can't be happening in this age of advanced due diligence and layered controls, but it has, And another area is that we've seen a rise in social engineering cases where fraudsters call into companies, again, purporting to be from the CDC or WHO requesting information. From an investment fraud point of view, we've seen sort of like investment fraud has also shown its head in parts of the EU, but most noticeably in the US. Not too long ago, the FCC sent out a notice or like an investor alert, specifically relevant to the pump and dump scheme, which was correlated to the COVID or coronavirus. Investors were asked to be on the lookout for, there were companies offering coronavirus related products, and they were supported by brokers who would then come in and try to convince an investor to invest in what was essentially like a penny stock. And of course, once entrapped as an unsuspecting investor, the stock price inflates. The broker who also had investments in those stocks quickly sell to make a profit. Then once sold, the stock price plummets, leaving the investor at a loss. So these are some of the type of schemes or scams that we've noticed during the corona pandemic.
Thanks, Nolan. Because I want to bring Andrew in here as well, because I've seen him nodding along in agreement with a lot of what you've been saying.
Okay.
So it'd be interesting, obviously, Andrew, from your point of view as well, because you, particularly, as a vice president of a payments company, what do you think? I mean, fraud, as Nolan's been talking about, there's such a cyber element to fraud and the social engineering aspect, and then payments fraud. What are your views here?
So yeah, I've been nodding along because a couple of things I wanted to points I wanted to make, sort of come back to something that Nolan said, and that is and I think this is echoed by Andy as well, the agility and the flexibility of the criminals. And we're not talking about some guy sitting in a garage perpetrating this crime. This is organized crime, and the criminals, they don't have to worry about their own compliance or data security. They're singularly focused on conducting their financial crime. I also like what Andy had said, where he brought us back to that human element that you mentioned, Henry. That's important, right? That's what's driving us, the notion of doing the right thing and making sure that we're protecting those vulnerable populations. In terms of payments, Fiserv processes more than 50% of US domestic ACH transactions. We've got payment systems that can send payments, everywhere in the world. The interesting thing about payments and how that's evolved and transformed over the last few years, and these are good things, right? The transformation of payments, the ability for me to send money to my parents in the UK from my Chase account, and that money to be there in literally less than an hour. If you look at the SWIFT GPI initiative, I think there's in 2019 there was around $77 trillion transferred over the SWIFT GPI. And I think 40% of those transactions are the money moved by those messages are in the money is in the beneficiary's account within something like 5 minutes. That's 40% of those payments. Those things are great for corporates, they're great for financial institutions, they're great for consumers like myself. But of course, what makes them attractive to us, that speed, that non-repudiation, that real-time settlement, makes them almost irresistible to the criminals. That ability to move money quickly and move money quickly that could have been moved because of some business email compromise, as Nolan mentioned. And that real-time payment fraud is something that you have to be careful, right? Because they're great services, but we need to manage risk appropriately and have technology that manages risk appropriately at the speed of these financial services. So monitor things in real time, and certainly the impact is sort of potentially systemic. It's okay if it'd be terrible for me if I lost £10,000 in a transfer. Someone stole it from my bank account. That would be awful. But if you're thinking about the movement of the global movement of high values of payments, then it potentially becomes systemically important. You can send a single FedWire transaction in the United States that's in excess of $1 billion. So if $10,000 goes from my account, that's one thing. That's pretty dire for me. But if there's an international trade transaction that's linked to the acquisition of, say, a physical asset somewhere that could be running into billions of dollars, then if you start losing that sort of amount of money, it's a bit of a doomsday scenario and could be systemically impactful to the global financial market. So I think from a payments perspective, we just have to make sure that we can offer these frictionless and great services, but manage risk appropriately in line with those services. That's something that's important. And I think if you look back, when we introduced faster payments in the UK, there was I think the year after faster payments was introduced, there was 135% increase in fraud because of those new payment rails. And think about that now at scale. There's an order of magnitude more real-time payment systems globally. I think by the end of 2021, there'll be around 60 real-time domestic payment systems, as well as things like SWIFT GPI around the world. So the payment infrastructure, it's all great and they're great services. We just need to manage risk in line with those payment services. And then the interesting statistic that came up in the poll results was, I know that there's it was sort of higher on cyber versus fraud in this particular audience, because the survey had them as the top two as well, and they are linked. So if you think about it, they're pari passu, cybercrime and fraud. And because if you conduct some sort of nefarious cyber activity, you've been gathering information, as Nolan mentioned, from a data breach, well then that can be a sort of predicate action for initiating some sort of fraudulent transaction. And they're all linked. It all becomes a life cycle that we have to use technology to monitor, because we've stolen information using technology. We've used that stolen credentials to create some sort of identity or to originate a transaction that then goes out to the real-time payment rails that has to be monitored.
Thanks, Andrew. I think again, I think you've covered some really important ground here. I'm keen now to move the conversation on towards cyber, because we saw this as the second most important topic in the Fiserv report, but also it's been of great concern to our audience. And so again, this is an opportunity for the audience to take a view here. So if cybercrime were a country, what would its GDP compare to others? this is in terms of the global impact and how much money you can make if you're a cyber criminal. Would you have a GDP of Germany, Spain, Ireland, Hungary, or Croatia? And while I let you, audience, work out that one, I think it's important just to talk about deep fakes, which is something we've been looking at very much at Themis, where people are using AI and advanced technology to impersonate human beings you might know and trust, and consequently commit crime through that. And there was a very important case which recently came up, where an individual transferred £235,000 to someone he thought was his boss, but actually turned out to be a cyber criminal impersonating him. And then the cyber criminal was cheeky enough then to do some follow-up calls just to make sure that the money had gone into the account. So I think this sort of technology is probably in its infancy at the moment, but it's only going to be growing, and it's certainly a risk that banks are seeing themselves. So if we see, is cybercrime Germany or Spain or Ireland, Hungary or Croatia? I think the audience has gone for Germany. I think the truth is Spain. I think as at the last count, it was $1.5 trillion, which again is quite a worryingly large figure when you think about it. And as I say, I think this is only going to grow and grow. Before we bring on to the panel discussion, I'd just like to say, in Themis, when we first went into lockdown, we did a briefing note about the risk of cybercrime at this time. And it's very interesting. Cyber criminals use the tactics of scarcity, urgency, authority, and emotion to trick people into parting with their cash. And the pandemic was just perfect for that. You were saying, look, there's scarce resources, come buy our PPE. There's urgency, you're going to die if you don't get this. There's emotion, what will happen to your family if you don't give us this money? And authority, there's lots of people, as we've already mentioned, this panel, impersonating the World Health Organization, for instance. So there's so many issues which have been brought up by the pandemic, which dovetail onto fraud, but also dovetail onto cybercrime. And you can see why it's become such a growth industry for criminals. So I think looking at our panel, it'd be very interesting, Andy, to hear your point of view as a police officer looking at fraud and looking at cybercrime. What do you think, how do you think this threat intersects in the world of a sort of specialist police advisor working on both the topics of fraud and cybercrime?
Well, as a fraud detective, cybercrime goes hand in hand with that completely, because of all the fraud reports that we receive in action fraud, 85% of them are cyber-enabled crimes nowadays, and that's let alone the crimes which we would call cyber-dependent crimes, which would be where computer systems are actually attacked through hacking or DDoS or ransomware. So really, you can't talk about fraud without talking about cyber, because cyber is the language, it's the method of fraud nowadays. You know, be that engagement with victims over the internet, or be that through smishing attacks, fake texts, or even using smartphones. Cyber is the way that fraudsters carry out their business to take money from innocent victims. So if you don't understand cyber as a police detective or the police or the police in general, then we're not going to get to grips with certainly fraud, certainly money laundering, and many other types of cases too. If you look at things like child pornography, all kinds of horrible things like that, which are all done over the medium of the wonderful thing that's called the internet, but there's also the wonderful thing for fraudsters, and that all is what you might call cyber crime. So we have to embrace it completely and understand it and understand how to police it. I wrote a little paper about 6 or 7 years ago now, talking about how policing, we're good in the real world and we understand how to police the streets, and the society understands that that there are laws that govern how you operate and how you behave in the street. But in the virtual world, there is nothing equivalent to that in terms of policing. And so it was a free for all. I call it a bit cheesy, but I call it the Wild West Web. I called it 7 years ago or so. And it's true, isn't it? There is much less governance, there's much less law of a framework that governs how you may operate in the virtual world. And yet something needs to be done. Without trying to suppress this wonderful thing called the internet, we need to think about how we can police that properly so that people are safe to carry out their business, go about their lives on in the virtual space, just as they can consider themselves to be safe and protected when operating in the real world. So that's what we must get to grips with, not just police, but governments and society in the future.
Thanks, Andy. And Nolan, I guess from your point of view, we talked a bit about fraud, and fraud is obviously using deception to profit, and that dovetails very much with cybercrime. But when we're looking at money laundering, is there a cyber element to this? And how do you think money laundering is going to be affected over from what we've seen last year and what we're going to be seeing over the next year?
Just 1 second. Yeah, sorry. So as I was saying, I think the important thing to note here is the correlation and the synergy between the various types of financial crime, be it fraud, money laundering, and cyber, and also cyber criminals. As rightly put just a minute ago, it is the tool that is commonly being used to facilitate criminal acts. So whether you are looking at money laundering or whether you're looking at fraud, as per se, it is the go-to. As we know, technology these days is far more advanced. A lot of people do a lot more things online. You've got internet banking, people hold their accounts online, etc., etc. So it is the quickest and fastest way to get to the bottom. And then when we take into consideration organized criminals or organized crime, and the blacknet, for example, you have criminals for hire. They're using sort of the sort of technology to do that. So yes, it does affect and spills over into money laundering as per se, and also it is a tool that fraudsters use in general. So you really can't separate the different types of financial crime, and you really cannot. And I think most companies need to understand this. I mean, as professionals who are working as consultants, or Andy there who are working as a police officer, we will get the full spectrum or full scope of how things are linked and interrelated. But how that gets passed across to the private and public sector could be, a more difficult task, because one of the things I've seen which how we can do that is through information, through training, through constant revisions of risk assessment, and all these sort of just general awareness is something that needs to be ramped up or heightened up so that businesses can be aware of how they can be attacked from the various angles as per se. I just noticed the question on the chat group whereby I think Lizzie was asking, how can banks more sort of humanize the effects of fraud or money laundering as per se? I remember a scenario whereby we were trying to gather information from customers, banking customers, and often what happened is that they push back. It's like, you have that set of information about us already. Why do you want it? Or why do I need to confirm or to ensure that the details you hold on me are still the same?
Would it be would this be a good point to bring Andy back as our resident police officer? Because this clearly sort of touches on the sort of public-private partnership aspect as well.
Right.
So it'd be very interesting to hear both your points of view here, I think.
Okay. Shall I continue?
And I'm just going to bounce it back to Andy quickly and just see what your point of view was in terms of public-private partnerships and their role in tackling financial crime. That's Andy.
Yeah, thank you. I can think of a very clear example of that because I used to be very much the head of it. Within my force, we have several teams which are paid for entirely by private finance. And I ran a team which was dedicated insurance investigation team, paid for entirely by the insurance industry within the UK via the ABI, Association of British Insurers. A well-funded team. We had a remit to operate right around the UK, to tackle insurance fraud, be that on an individual level, but predominantly that was on an organised crime level. And so that team had been going for successfully since 2012, and when I finished, we'd secured continued investment right through to 2023. So that team will most likely go, continue to carry on. But we've got other teams that have been operating since the year 2000, paid for through UK Finance, carrying out sort of banking investigations, banking fraud investigations, and so on. So public-private partnerships in tackling fraud do exist, and we've proven, certainly within City Police, and there may be other areas where this has happened too, but we've proven these things can and do work with the right caveats, with the right safeguards in place, but it's possible to run these things successfully. So I would be a real advocate of it in the future.
Thanks very much. Thanks very much, Andy. And I'm just conscious now that we want to leave a good amount of time for questions at the end, because we're getting quite a few coming through. So I think probably the final word here I would like to give to Andrew Davies. You commissioned the Fiserv report into financial crime during 2020 and our views on still 2021. So it'd be just good from our point of view just to hear, where do you see as the key challenges facing us in 2021?
So quite fascinating comments from Nolan and Andy, particularly around what Nolan talked about was that need for that holistic view of financial crime. So, and this covers, we talked about fraud, we talk about money laundering, but there are other predicate crimes for money laundering other than fraud: human trafficking, drug trafficking, arms trading, tax evasion. And in order to fight financial crime, we need that holistic view. We also need to take examples like Andy had mentioned of the City of London Police collaborating with the commercial world. So collaboration is key, and that's collaboration, as Nolan mentioned, across your own organization to get that holistic view. That's collaborating with other commercial organizations, other banks to get that perspective. But most critically, it's around collaboration with the regulators, with law enforcement, and that's because they can be the sort of pivot point that draws all of the data together. There was a recent fantastic Themis roundtable event where we talked about collaboration in the industry. The FCA in the UK have talked about the need to focus on outcomes. So the amount of money that's laundered through the global financial system annually is around 2 to 5% of global GDP. That's somewhere between $1 trillion and $3 trillion US. That's around, to come back to that earlier point around Spain, that amount of money is around the size of the German economy. It's around the size of the US federal budget. That money, that percentage has been the same for the last 15, 20 years. What we need to do is to leverage that sort of collaboration that Andy mentioned to try and realize the outcome of actually materially reducing the amount of financial crime that we see. FinCEN in the US have been talking about that same need to realize a better outcome. So it's okay having checks in the boxes and saying, okay, we've got some sort of KYC process to make sure that we're not doing business with some nefarious party. Of course, if you look at that, then it's something that you talked about, scarcity, emotion. There's a whole idea of, with respect to data, how current is data? What is the data veracity? What is the integrity of the data? In the US alone, there's around, this is a Dun & Bradstreet number, there's around every hour of every day of the year, there's around 184 changes of ownership or control of small businesses. Well, how do you manage that sort of volume of data in the context of KYC, as Nolan mentioned? Well, one of the ways of managing that is to make sure you've got up-to-date information at corporate repositories. You've got the latest information from around sovereign identity that's maintained by the regulators or by the government. So collaboration is key to us achieving an outcome of reduced financial crime in 2021. Collaboration internally, collaboration with technology, and collaborating with the industry, whether that be other banks, other financial institutions, or regulators. I think that's key, and that's really what, to come back to that point that we started with the opening. The purpose of the survey was to really understand trends so that we can better serve our customers with technology, and Nolan put his finger on it. The technology needs to be holistic. It needs to react to in real time at the speed of financial services. And that will allow us to be more successful in 2021 than we've been in 2020.
Okay, Andrew, I think that's beautifully summed up and bang on time for a good 15 minutes for some audience questions now. So thanks again. And thanks to our panelists, because I think that's been a great discussion. And we do have some really good questions coming in. And just to the audience, there's the option on your right-hand panel to ask questions. So just click on the questions tab, write them in, and we'll try and cover as much ground as we can. And the first one, I think this is very interesting. So one of the things, obviously, is that financial crime and big recessions lead to huge frauds and fraudulent behaviour. And after the financial crash in 2007, we saw the Bernie Madoff scandal come to light. So, Andy, if I can start with you, what do you think is the likelihood of us seeing these other huge sort of frauds coming to light next year as we enter this big global recession?
Yeah, I think unfortunately it's just inevitable. Albeit in my experience, doesn't matter what the crisis is, you always have fraudsters making use of some sort of crisis to further their crimes. But it tends to be the same type of fraudsters, just merely changing what the product is or what the investment scheme might be. So I did investigate the first UK-based Madoff type scheme in around 2009. So this was a chap on a smaller scale. He was doing exactly the same that Bernie Madoff did, but he was doing it on a smaller scale to the tune of multi-millions as opposed to multi-billions, and operating in the same way. It was not much more than a pyramid scheme, really. But he was quite clever in producing some high-quality monthly trends data and that sort of thing that convinced his clients that their money was their investment was making money. Of course, it wasn't, but he was just a total out-and-out fraudster. And we will see more of that. I suppose it's up to imagination what the product of choice might be or what the offering of choice might be, but I suspect it will be related to either COVID vaccines or COVID research, for just to name two, during the course of next year. Those will be the exciting things that people might want to try and invest in or be minded to try and invest in because they think they're doing the right thing and they think it's going to be profitable for them. But in fact, it's fraudsters playing on people's instincts. All we can do really is just encourage people as much as possible to do their due diligence before they invest in any scheme of any kind. As much as possible, stick to operating with people who are properly regulated, either individuals or companies that are properly regulated by the FCA and others. And if people do find they have become victim of a fraud, then get in contact with authorities as soon as possible. Because really, the sooner you do contact the authorities, then there's the more chance we can perhaps do something about it, such as possibly even recovering your money for you. So, repair the damage, but don't delay until you make that phone call. Those are the three pieces of advice I think I'd have to give to people.
Thanks, Andy. That's really helpful. I'm going to cover some more ones now. So Nolan, this is one for you. The FinCEN files drew international attention to failures in banks and regulators combating financial crime. What do you think are the key takeaways of these revelations for banks?
Sorry, can you repeat that again?
Sure. So it's a question about the FinCEN files. And so this obviously exposed a lot of issues in terms of the private sector reporting financial crime. What do you regard as the key takeaways from the FinCEN files?
I think from the FinCEN files is what I took away from that is, again, going back to just touching briefly on the importance of a holistic view, is that very often there is a tendency that the public sector tend to not be targeted with fraud as per se, and more so rather than having like say bribery and corruption. I think one of the biggest takeaway from that is the need to have your teams communicated, the need for regulators to be, I wouldn't say much clearer, because regulators stop very short of telling institutions what they should do or how they should do things. But where the gray area lies is that how we interpret rules and regulation in terms of what we need to do to make sure we manage the risk of financial crimes. So it is really important for me And I always, when I'm speaking to clients, I always say to them, it is important that you understand what is being asked of you from a regulatory point of view, and how does that get translated within your business? How is that related to your risk appetite, your product, your service, your delivery channels? Because I think if you fall short of any of those risk factors, you're missing a big chunk of information, big chunk of data. You're likely to also be missing relevant risk that may be, relevant to your company. So in terms of you gather report information to enable you to make decisive decision in terms of controls or the effectiveness of them, then you don't have that structure, you don't have that information, you don't have that data. So again, a holistic review. Take for example, let's go back to the Danske Bank scandal. Most of the issues they encountered is because they didn't have a holistic view. Headquarters in Denmark did not have an oversight of what was going on in Estonia. And again, a perfect example as how an institution operating on silo platforms, not having that overview, can miss so much. So whether it's the private or public sector, I think the same things apply. Be thorough, understand your risk appetite, understand what information needs to be included in your risk assessment. And in the process of sort of constructing your risk controls, ensure that they are sort of all-inclusive, so that when you have an audit or when you have, let's just say you're doing your reports or you're collecting information, then you're in a position to understand the full scope of your exposure of the risk that you have.
Thanks very much, Nolan, and apologies there, we lost you a little bit, but I think we got most of what you said there, and that's some really useful context. We've got another question which I really like here, and actually so Andrew Davis, if maybe I could ask you to do this one. For someone who's been living under a rock throughout 2020, if that was possible, what do you think has been the biggest financial crime scandal? And this individual reckons that Wirecard for them was probably the biggest financial crime scandal. How about you with your sort of holistic overview of financial crime in 2020?
Yeah, great question. And it's funny, most of us probably feel like we're living under a rock. I mean, I live in New York City, and we've been more or less in lockdown since the beginning of March. I feel like I live under a rock, but thankfully I do live under a rock that is somehow I'm fed some information about financial crime, so that's sort of useful. Just want to add to what Nolan had said about the FinCEN file. It was sort of interesting in the FinCEN files that it was almost like the best of times. It's the best of times, it's the worst of times. So financial institutions were reporting certain activity. It was just, so that's a good thing. But then it's a bad thing because there was no real action taken on what they were reporting. And if you look at it, this is goes to this need for holistic view of financial crime risk management. Is those financial institutions saw a material impact the first day that the markets were open after the FinCEN files were sort of released. At least two of the financial institutions involved actually saw their stock prices drop somewhere between 6 and 10%. So there's a material impact of financial crime on shareholder value. So it means that certainly what Nolan does, what Andy does on a day-to-day basis, they help support these institutions to do the right thing, support the financial system itself, and then support the integrity of the financial institutions. For me, quite interestingly, one of the top financial crimes this year that we've heard about is actually almost sort of tangential or orthogonal to what we've been talking about, and that is the one that immediately springs to mind is and I guess a lot of the actions for this actually took place in 2019, but we heard about it in 2020, was the anti-bribery and corruption enforcement action against Airbus. It was a collaboration between the FCA with FinCEN, the regulators in France, leading to an enforcement action for bribery and corruption violations against Airbus in excess of $3 billion. So I think that was sort of critical. And then to come back to, you know, the other things that have really horrified me in around financial crime in 2020 is just that exploitation of the vulnerable. You know, we know from the International Labour Organization that there's 40 million people trafficked every year, 75% women, 25% children. That exploitation of the vulnerable and stealing, even if it's just stealing credentials from children to create synthetic identity, that has been really, for me, if I'm looking at this from the moral imperative, that's been the sort of number one criminal activity that has sort of shocked me and sort of inspired me in a way to sort of continue to do what we do.
Yeah, fantastic. Thanks, Andrew. And yeah, again, I think it's always hugely important when we're dealing with financial crime is just to always keep on reminded about the human cost. This is a really interesting and very topical one, which I think maybe would be good for Andy. So Interpol recently warned that organised crime syndicates will try to infiltrate vaccine supply chains and steal stocks and supplies. As a vaccine starts to be rolled out in the UK, is law enforcement worried about this risk, and are there prevention plans in place?
Yeah, I think I have to answer by saying I'm not that closely involved in the organisation to try and protect those supplies, and that works. I can't give you a direct answer, but
Sure.
personally, I think within the way it's going to be controlled within the UK certainly, and through the NHS, I don't think there's much opportunity. I hope I'm not wrong, but I don't think there's much opportunity for fraudsters to get involved in that supply chain, because I think this will be very tightly controlled through the NHS systems. Albeit NHS is enormous, frauds do happen within the NHS, we know that, but I'm not that worried. So I don't think there'll be too many external suppliers brought in that are not normal to the way the NHS carries out its national vaccination programs such as flu and others each year. So that doesn't worry me too much, and I hope I'm not being naive in that respect.
And well, selfishly as a moderator, and just to follow up with another question, how about Brexit? That must be another issue, particularly when we're talking about public-private partnerships and intelligence sharing.
Yeah, I saw that other question. No, that does worry me. I have to say, I voted for Brexit. I thought it was the right thing to do, but I didn't believe for 1 minute that Europe would cut their nose off to spite the face and stop cooperation between law enforcement. But it looks like they are doing. And personally, as an officer, I've made use of things like European arrest warrants to go to Europe, fetch someone who'd been arrested by, for instance, German or Belgian police on my behalf, and just put them on a plane and bring them back, nice and easy. I've been to Europol multiple times to engage almost on a direct one-to-one basis with compadres in Spanish police and Swedish police and the likes, working with them as if I was working with colleagues next door. All that is going to go come 1st of January, and that is going to make life quite a lot more difficult for us to investigate crime, especially things like cybercrime, which very much operate across international borders. No doubt about it, that's going to be harder than it was, whilst we were in Europe. So, and I'm surprised that that's happened, actually, I have to say, but it's a consequence of what we voted for, and we'll find ways around it, but it is going to happen. It's going to make life more difficult for a while.
No, that is worrying. Yeah, probably a very pertinent way to end the conversation. I'd just like to thank all our panel for taking the time to talk to us today. I think it's been a really interesting discussion. We've covered a wide range, but I feel we've had an opportunity to really go into detail in a lot of the stuff we've been talking about. And as ever with our Themis webinars, if you have any further questions which you'd like to ask to the panel, you can go onto the Themis Senate and submit questions, and we'll endeavour to get as many of those answers as possible. But after that, I think it just falls to me to say thank you very much to our panel today. Andy Fyfe, Detective Chief Inspector at the Economic Crime Department of the City of London Police. Andrew Davies, Vice President, Global Market Strategy, Financial Crime Risk Management at Fiserv. And Nolan Williams, CEO of Leeds & Williams. Thanks very much, everyone, for joining us today.
Thanks, everyone.
Thank you.
Thanks.
Thanks, everyone.